Joining us now, Paul Bishop, along with his attorney, Marcus Jackson. Good morning to you both.
Morning.
Good morning.
Mr. Bishop, let's talk a little bit about you, because we're watching the 60-minute story last night, and one of the things that was established was, as a whistleblower, maybe you're not the most ideal guy. You had a little bit of a reputation around places you worked as being blunt-spoken, to say the least. Would that be fair?
I think that's very fair.
Okay, very good. What was your anticipation when you went to work for World?
Well, I'm a salesperson. I had a financial background, and they had a great reputation. I knew some people that worked for them, and my expectation was that I'd make an awful lot of money and learn something about the mortgage industry.
Because one of the things that was outstanding about World, at least in its history, was it had so well weathered the financial crises of the late 80s and early 90s. It seemed like their economic model or their business model made sense, right?
As near as I could tell, and you know, I had a finance and investment background, so when I took a look at them, they looked flawless.
Okay, so what was the difference between your anticipation and reality?
Well, the reality was that I think as the loan volume began to pick up, the demands on them to fund more and more loans, because they had an ever-expanding infrastructure, started to weigh on them and force them to lower the standards that they had established in the decade previous.
What kinds of practices did they undertake, at least from your view, that really raised your biggest suspicions?
My biggest problem was that there were people who simply were not creditworthy, who, you know, when you're making an investment in a home, the home has to have the right value, the investor has to have the right credit score, or the buyer, and they have to have the right income. And if any one of those three legs, if you will, on a stool are missing, then you're going to have a problem.
Right. You know, we have communicated, 60 Minutes has communicated, and the early shows communicated a lot with Herb Sandler, one of the founders of World. And one of the things he says is we consistently funded less than 60% of the loan applications we received. Greater than 40% were dropped because of outright loan denials and loans withdrawn during the underwriting process. It doesn't sound like this business model matches up with what you were finding.
Well, I don't doubt his numbers. I don't have any way to check them. I really wouldn't be concerned with the 40 that you didn't underwrite. It's what was the quality of the 60% that you did underwrite.
So how does this then, because one of the problems with the whole subprime loan mess was that so many of these loans were made, and then they were bundled up and sold to other companies. They were sold overseas. They were sold all over the place. Now, World never did that, though, right? Didn't they always maintain all their control over their mortgages?
They had absolute control. They were what's known as a portfolio lender. They were one of the few lenders that survived the craziness that happened in the early 90s because of their strict underwriting guidelines.
Right. So how could they have made money doing what they were doing?
Well, they made money. You remember that they sold the bank in May of 2006, right at the peak of the bank's profitability and where they had suffered almost minimal losses. I think they had at that point, they had a pristine balance sheet, but you know, that was soon to end because the underwriting had taken on such dramatic changes that they were taking incredible risk into a bubble that was getting ever expandingly bigger, and so they were underwriting mortgages on a $600,000 house that was probably worth $400,000 and moving to $800,000, and so when that bubble collapsed, they collapsed with it.
It's a definite feel of a pyramid there. Mr. Herb Sandler has told us that none of this would have happened had the housing market not collapsed and houses gone to 50% of the values that they were as these loans were being made. And of course, there are lots of legal issues here that are too sensitive for us to get into. But in the meantime, we thank you, Mr. Bishop, very much for your time this morning. We should also note that we invited Herb Sandler to appear on this program this morning. He declined, but in a statement to the early show said, Golden West had the strictest loan review and lowest default rates in the industry and was the only prominent lender to warn government regulators repeatedly about excesses in the mortgage industry. Mr. Bishop and Mr. Jackson, we appreciate your time this morning. Thanks.
Thank you.
Thank you.
All right.